Hi everyone. Today let's take a quick look at bond yields as well as earnings. Then we'll take a look at the charts. Then we'll look at my results for the day and my thoughts going into the Monday session. If you like trading stocks and options and making money, definitely like and subscribe. I make videos like this every single day that the markets are open as well as Sundays, so make sure you hit the bell so you don't miss out on any future episodes. Welcome to the Portfolio Bulletin. Let's get started. So yields were sharply higher after Fed Powell's comments yesterday. As was expected, he said the higher for longer mantra over and over. He did sound a little hesitant on whether they were going to raise rates or not, and this is because rates are already going higher on their own, and that's basically what they're outlining in this article. He laid the groundwork for the fact that they are going to continue to hold rates and that they'll probably hold steady at the October meeting at the end of this month. Based on what they're saying here, the Fed is in no hurry to tighten monetary policy any further because yields are already continuing to go higher. And we've been talking about that for a while on the 2-year and the 10-year. We talk about it almost every day as it continues to stair-step higher. It is down a little bit today, but that is not giving markets any reprieve. They're already very high relative to where we've been recently, and we are hitting highs going all the way back to September of 2017. We'll take a look at that on the longer term charts. He also mentioned things like fiscal deficits, or what he called a change in correlation between stocks and bonds, and he suggested other factors are playing a larger role in pushing up yields, meaning that they don't have to do so on their own anymore. As long as monetary policy continues to stay tight, the Fed is going to stay here, in my opinion, and that's further outlined here. The whole idea of tightening monetary policy is to affect financial conditions, and that's already happening without the Fed doing anything since the last meeting. Moving over to the calendars, there was nothing on the economic calendar for today, but in terms of earnings, we have American Express beating on both the top and bottom lines. SLB, this is an oil company, missed on revenue but beat on earnings. You like to see it. And those were the only ones really relevant here for today. Moving over to Max Payne, you can see we finished down around that 420 level. Max Payne much higher. Took out 425, 420 ended up holding, but just barely. Quite a lot of puts making money here. Total options up around 4 million for the end of day. Lots of puts still in the market, 2.5 million. Pretty interesting close here. Typically you don't see this strong of a downside move with this many puts in the market, which just goes to show how bearish markets really are right now. Moving over to the charts, there's not much to add from yesterday's video. We fell through the session yesterday. We fell through the session here again today. You can see we were chopping at 425.82, broke that level, broke 421 here at the end of day. Next level for me is down at 416.95. That is a big move down. Finally got bearish momentum on the daily chart. We knew that was going to happen yesterday. We also broke the 200-day moving average, which is a big deal. Zooming out quickly here on the daily chart, you can see we've been in this structure. We're right at that downtrend line. Definitely interesting. Right at these previous lows as well. If this area breaks, you should expect to see a push down into this 41.28 area on the SPX. Moving over to the NASDAQ, very similar thesis. Did rally up a little bit, didn't make a much lower low at the end of day, but still bearish throughout the session. Down about 1.5%. You got the 144 sitting there at 353.80, right at these previous lows, just like on the SPY, bearish momentum. And this does look very weak going into the Monday session as well. Moving over to the Russell and the Dow, same thesis. Everything continued to fall pretty aggressively throughout the day. Big bearish momentum on both the 4-hour charts. Russell taking out the 167.50 level. Next level is 164. And then below this, there is basically nothing for a long time. We've talked about that multiple times, and we'll hit it on the Sunday video once again. But Russell coming into that critical zone needs to hold if it's going to. Dow similarly fell throughout the session. No levels in this area. It's kind of a big open area. You can see we moved through it pretty steadily the last 2 times. Once again, coming into those lows around that 329.40 level. Moving over to Apple and Tesla, both of these were a dumpster fire on the session. Apple down 1.5%. Took out that trend line that we'd been watching, been tested multiple times. Both Wednesday and Thursday tested as well. And then here today, pushing lower, taking out that level, pushing down to 170.90. You also have the 200 SMA sitting there at 169.51. Interesting there. Momentum bearish. Everything looks like this is going to go lower. And then Tesla continues to fall after that earnings announcement. Took out the 200-day moving average and the 214 level. Next stop for me, down around that 197.75 level. Moving over to Staples and discretionary. Staples was bearish on the day, but it continues to hold up much better than everything else. First candle was up 0.5%, second candle down 0.8%. Still bearish momentum, but still well above these previous lows going back to mid-October. Discretionary, straight falling knife, following suit with Tesla. Next level for me, 148.89. Moving over to yields, 2-year, 10-year, both selling off on the day. 2-year was down 1.25%, back down to that 2% range. 10-year still remains elevated, up around 4.9, got all the way up to that 5% and then sold off a little bit from that level. The question is this going to hold here? Macroeconomics say it's going to stay in this range, but we have clear divergence on RSI, momentum rolling over. The question is what happens next. Obviously, still a very strong uptrend, and you would assume that it's going to go higher, but it's a little bit extended in the short term. And you can see last time we got that extended, we had a slight pullback and then a continuation higher to new highs. Moving over to the VIX and the move index going higher on the day as yields continue to hover in that same range. VIX finishing right on its highs, slightly new high from the previous close. Still watching this downtrend line around 24.50. I do think we're going to hit that range before we see a breakdown of this structure on the VIX. Moving over to my accounts, I just held those calls that I had going into the day. I didn't trade in and out of anything. Obviously, it was abysmal across markets, so that's fine. I'll take the $132 to the upside while the rest of the markets were down 1.5%. So I had a lot of trading losses yesterday, so I kind of took a break here today. Obviously, my bias is still to the downside, and I'll go ahead and reassess on Monday if it's worth opening any new positions, but most likely they will be to the downside. Let me know down in the comment section what you think of the Fed and yields continuing to go higher, or any of the charts that we talked about here today. Of course, this was the short video. I'll go much more in depth on Sunday. So definitely like and subscribe if you got any value out of the video, and make sure you hit the bell so you don't miss out on those future episodes. Of course, none of this is financial advice. This is all for entertainment purposes. Good luck in your trading and have a great day.